Hello, this is Stephen Harris, a head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 6:55 a.m. Central Time, and I am recording this in preparation for the market day of February the 3rd, 2015. Full disclaimers are at the end of the video, but be aware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So, very interesting day we had yesterday with significant weakness and even breaking down below our range support. And then the bulls came in and then basically took it right back to where the prior day started. So it is back into the range with a tickle and maybe false breakout to the bottom side. A lot of weakness still showing across many indicators, but still it shows that the bulls are not quite cooked yet. So let's dig right into our morning report and see what's happened in the overnight. In the overnight, our key broad market futures indices are up slightly, running about 0.25%, and they're all about the same. Nothing really in particular to point out. Crude is actually up about 0.38. It's probably the second largest mover of our group of futures contracts that we follow. Looks like bonds actually probably had the biggest move, down over a point, 0.7%. And then, of course, gold was up slightly, and the euro was basically scratch at the time that I took this snapshot. In overseas markets, China continues to show a lot of volatility, but this time up 2.46%. Japan down 1.27%, so the Asian markets going in very different directions. Germany and the United Kingdom both up 1.2%. And are showing some strength, so that could also buoy our open. In terms of macroeconomic reports today, we do have several reports, nothing that really gets you earth-shattering. An orange flag report in factory orders, total vehicle sales. There is a ADP report coming up tomorrow. That'll be a red flag report before the market opens tomorrow. As well as, of course, on Wednesday, you'll have crude oil inventories. If you trade the oil markets, that one's an important one. So all in all, not too much in terms of the macroeconomic reports to drive anything in particular. In terms of volatility, we continue to have significant volatility. Obviously, yesterday is a great example of that. We seem to be picking up in the month of February, right where we left off with January, with the kind of the storyline of the year 2015 being volatility. Obviously, while the VIX, ebbed down with the big move up, it didn't fall very much. It's still elevated. The short-term VIX is at a 19.37. We had, again, another standard deviation move day, and the S&P 500. Implied IV percentiles fell a little bit from the day before, but are still perhaps in that upper third or so range. So significant intraday range volatility still in play. The strange thing, of course, is that we don't actually seem to get anywhere. We're right back practically to where we were at the open a couple trading days ago. So we seem to just bounce back and forth and form almost tweezer-like patterns and not really achieve anything other than to drive position traders crazy. So let's take a look at our current risk levels. And really not many changes here. This will be probably a fairly short video today. We're still calling this Phase 5 the break of support. We indeed did break support yesterday on an intraday basis. Did not close below the last 3-month range, but we certainly had a tickle and continue to show challenge towards the bottom side far more than we seem to challenge the top side of this range. We are still uptrend under pressure. The active trader market posture still calls for no new short-term or intermediate-term bullish trades. Clearly, reduced position size is still called for. Looks like we were right yesterday, though. You would have had quite a ride getting there. Our one-day outlook for yesterday with the seasonality and so forth, the first day of the month, very bullish, and it certainly was very bullish, though you may have had a lot of doubts before you saw that realized. But those opinions are based on close to close, and it certainly yesterday was very bullish. Today, after the big move yesterday, much of that edge has been neutralized, but we're still slightly bullish. And then both on the 1-day, 3-day, as well as 2-week. Market forecast opinion, market postures still continue to be very bearish. And you see these ratings continue to drop across all 4 markets. All are angled down. 3 of the 4 indices are below 50. So not very good there at all. The Dow is in danger of going into the very bearish below 20 zone. Hedge warning status still remains elevated at a red light level 2. And a number of the, we have to say though, with those moves yesterday, a number of the volatility based warning flags have kind of ebbed off. We've returned to okay status on several of these. And really everything else here is the same. No new changes to these various warning flags that we look at. VIX is still outside the acceptable volatility window, not conducive to option income strategy, so kind of keep that in mind. And in terms of our market postures, again, a lot of chop going back and forth in this because our posture moving average lines are all very, very flat, and these are flip-flopping back and forth, and aren't terribly valuable right now. But we continue to watch utilities. We continue to watch consumer staples and consumer discretionary, and healthcare have been the ones of most interest in terms of being stable lately, but even those, you're seeing a lot of flip-flopping of the postures in the different time frames. And until we truly set a direction, it's going to be very difficult trading in any of those sectors. Obviously, yesterday, big up day, and you see this reflected across all the indices. Basically, just a flip-flop of the day before where this was red all the way down the column, and we've just returned where we were. Really no change as well here. So biotech, healthcare, internet index, transportation, railroads, and retail still making up the most interesting industry groups. Do your homework and research on those groups and the companies that are contained there for best opportunities when you get a signal on your system. As always, we greatly appreciate you liking us on YouTube or your favorite social media platform. And of course, comments can be provided into Facebook. You may also send us emails with commentary or suggestions at support@falconglobaltraders.com. And of course, more information about each of our 3 live trading rooms is available at falconglobaltraders.com. We have a futures trading room, an options trading room, and an equities and ETFs trading room. The equities and ETFs trades a core portfolio plus swing trades. On the futures one, that's an intraday day trading kind of setup. But more information on all 3 of those is available at that site. Disclaimers, as always, hit pause if you need more time to review this. And of course, we always appreciate you every day in the Falcon Global Trader community. Thank you and good trading.